Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, you know what? I don't have the music ready. I feel like so unready. We need the music. I can't do this without the music, guys. Isn't that so ridiculous? We went so many years, like, really reluctant to do the music, and now I can't live without it. The music. Okay, so, to the charts. Yesterday, S&P 500 just a really... I mean, look, it's not like the biggest buy that we've had in recent history or anything, but it really came out of the blue. It was really strong buying. There was some Fed speak yesterday that was a little bit more dovish than expected, and the equity markets really reacted to it. It was comments from Bostic, I believe. But here's the thing. We come over to the treasuries. Well, like... I mean, the treasuries did move, but like not really. We're just back to where we were yesterday. So this is a little concerning to me, right? The S&P 500 thinks that, right? Isn't that like, that one makes no sense. They blame it on a Federal Reserve speaker. Equity market reacted. Interest rates didn't react. I call bullshit. All right. So we would be a little bit careful about the S&P 500 here, but there could also be some options things going on, kind of pinning them to 4,000. We're just below 4,000 right now. All right. Checking the other instruments, we got oil. Oil seeing a little bit of a sell here this morning. Natural gas is kind of flattened out. Gold and silver building back up on recovering some of that downside that they have. Not too bad. Well, copper's kind of done all sorts of crazy things, but this morning they are maybe slightly up, right? And then we got to come over to the Bitcoins. Bitcoin taking a plunge this morning. That was not in my news, my morning readings. Well, I guess they did say that it was down, but that is like a much harder sell than I thought it was. And there is some like news out there about Binance and like regulation in Congress and all this sort of thing. So that might be what's driving them over there. And then we got the dollar, which is just kind of sitting comfortably in the middle of the range that it has developed over the past few days. And I just want to note or, jog your memory that the dollar has been quite influential these last few weeks. So, this morning, normally it would be a non-farms Friday, but today, no real bottom of the hour news. We do get S&P PMIs. Normally, these numbers are not particularly important, the S&P ones, because they're kind of backwards looking. But we also get the ISM services. So that is important. That's not until 10 o'clock, though. So we might have a slightly quieter morning here. Yeah, so I did too. Remember, well, on Monday we looked it up and we saw that it wasn't there. I don't know what the rule is that allows them to delay it this time. Maybe it has to be like there has to be a minimum amount of time between the reports or whatever, but it's next week. It's next Friday. Okay. But today we get ISM also at 11 and 12 o'clock Eastern time. We got Logan, Bostic, then later in the day, Bowman and Barkman. So we have a full slate of Federal Reserve speakers coming up later. Okay, so we do have some things that could move the markets. I wouldn't expect to see as many big like meta orders outside of what might come from the news, but you never know. Sometimes on Friday they surprise you. But I am going to be I always hold back a little bit on Fridays when there's not like one of those big headline events, which means that we can have a little bit of fun. All right. So first of all, though, let's kind of go through, look around and see if there's any kind of other information that might help us. I've heard several people on left accuse states of banning books, but I've seen nothing suggesting that that's true. Well, schools have removed books from their libraries, but they haven't banned books. Thank you for the DX feed video, by the way. Isn't it great? I thought that one was so cool. It didn't get as much attention as I would have liked, but you know, it's kind of a technical thing, so that kind of comes with the territory. But I had so much fun making that video. The DX feed guys were so great. I gotta tell you, I worked with some people and platforms that I am just like, I don't ever want to do anything for this guy again. Like, all of the services that I've ever worked with are great. Oh wait, hold on a second. I have to talk to this guy here. Everybody that I've worked with, like, their services are good, but there's been a couple of people that, like, I didn't like working with them. You know what I mean? And but the DX feed guys were the most fun, and we went back and forth. Like, I had lots of questions about how it worked, and they were able to answer like really detailed questions about how the feed worked, what the sequence of operations were, and for that indicator that I made for it in particular, that was really fun. So I don't know how many people are actually taking an advantage of the indicator and everything, but I was still really happy to have it. They want me to, so I don't know if I can. I've been having trouble with my work email. It sounds like they fixed it. But the guy that's been helping me is in a different time zone, so he messaged me early. Oh, by the way, I'm just now noticing that the yield is right at 4%. That's kind of funny. Yeah, it's kind of interesting. And by the way, and stuff, I thank you for commenting on the video. It really helps him out. Really boosts videos. Like, I know that when a video gets a certain number of comments, that's gonna be a popular video. And getting just that one comment on it, like, helps the video out so much. You wouldn't even believe how much it influences the algorithm. Okay, let's see here. Brannigan. Oh man. Okay, that's not related to that's an interesting subject you got there, Brannigan, but I don't know if that's what we want to get into at the moment. Marko Bajovic says latest experience suggests 12 to 15 month with a more longer bias. Some fail to understand that not even the smallest 25 basis rate hikes from March of last year has taken full effect yet, let alone all the giant ones that followed. It's hard to imagine what will happen when all of the outsized hikes fully kick in. Oh, I don't know that. How do you connect with a broker if you're using DX feed? So if you're going to use DX feed to trade stocks, then what I think you're gonna have to do, because it doesn't support execution, not on the DOM. So and DX feed is just the data, not the execution of the stocks. So what you would do is you'd have like NinjaTrader set up, and that would be your data and everything, right? And then you would have to have your regular stock trading platform, like Fidelity is what I like to use, to actually place your trades, is what you would have to do for that. Yeah, you could use interactive brokers. That would be another good one. I'm really in favor. Interactive brokers is an interesting one. Like, they've got a weird platform. Let's say they've got a weird platform. I'm not going to say it's a terrible platform, but it's just a little weird to me. But I think that you tend to do better if you get one broker that's like specialized towards futures and one broker that's specialized towards stocks and options. And combining them all together, which is interactive brokers and Thinkorswim are like the two places that you do that. What basically ends up happening is what you get for futures is not very good. So I think you're better off getting a future specific broker and a stock specific broker. And I use Fidelity for stocks. So oh, that was a good nose blowing. That feels so good. Okay, so nothing too interesting on Twitter. It was pretty quiet last night. I don't see anything too interesting on Zero Hedge. Gaslighting conspiracy theories already proven true, and can 2023 there actually have been some, haven't there? 3-month 30 yield curve has been steepening first before a recession, suggesting a recession as soon as June. I don't know if that steepening is actually a recession coming, though. That's the problem. I don't think that indicate. You know what? It's going to be just like last time. It's going to be like right now, it doesn't actually mean a recession, but then something will happen that is like recessionary, and then they'll say, "See, it worked," even though it was like unrelated. Just like when they said that the yield curve inverting was predicted COVID, right? We're getting an okay uptrend here off of the open. I mean, so they started down at 24 actually, so that's not a bad run. Well, I don't know. We spent a lot of time this week at 3.95. I think it'd be really difficult for them to get to 3.95 today, though. I mean, it's down there, it's possible, but that would be a bit of a move. Also, the 10-year is not participating so much on here. It's really being driven by the 5-year. It's not being driven by any kind of news that I can see. So I can't really say what it actually is. Let's just keep an eye on it. All right. In the meantime, let's read from that great tome, The Ferengi Rules of Acquisition. Yes, always has some good lessons for us. Mine to turn into the greatest single business deal of my career, and that dream can be summed up in 7 little words. No, wait, that is not the day's thing. I was misreading it. I'm sorry. It is always good business to know about new customers before they walk in your door. So if we know that somebody is gonna, if somebody's gonna come in and buy treasuries, we would like to know that they're going to do it before they come in and buy them. See, the Ferengi are so smart, guys. I know it seems like they're just greedy and they were intended to just be greedy, but they got some good stuff. They got some good business advice, man. They do. How would you determine that? Well, that's a good question, because you can't really see them walking up to the shop, can you? But sometimes you might know that they need to buy something, right? This move here right now, I think that it would probably have to be something related to like rebalancing things at the end of the week, right? But I just didn't have any kind of information predicting any sort of a move, so I didn't know that they were coming. But you can imagine if I had known that they were coming, and I could have just bought right first thing, would have been better, right? Yeah, would have been better. We are, well, okay, so we are seeing a move in the dollar. I didn't notice that, but that looks like that's what's driving us, and it's more so the dollar than it is the Japanese yen. Is it? Yeah, it looks kind of more like it's the euro. Let's see here. What about the pound? Well, the pound is kind of moving too, so it's a little bit hard for me to judge. But the dollar is moving. Sometimes you get well, so it's interesting that they're coming out of the dollar, though, going into the weekend. Cool indicator would be to see how many market orders you need to raise the bid or offer to see potential absorption in one direction, like it, but can be really useful. Yeah, I really don't know how you display that on a chart, you know? Because the whole thing is that what we're looking at on the DOM is more granular, right? On the DOM, I can see every time that it ticks up, how many contracts that it take, and you can kind of see like the way that it goes, right? And then all of a sudden it will switch from like, oh, normally they're trading like 1,000 contracts, and then all of a sudden they're like pulling, and it's only taking 100, 200 contracts to move. What changed? Right. Well, usually that meant that there was some sort of news and that the market makers are pulling, right? Yeah. And so how do you display that? Well, if you go on a chart and you do it from like a one range chart, then I guess you can kind of see that, like, because you'll get a new bar every time it flips up. But then it just ends up becoming noise, right? And like, how do you quantify that? You really, but I mean, that's the issue, is that you can't quantify that to give you like a more general measure without losing some of the informational content of it, right? So but at the same time, it's like, why would you need to do it? Because you could just watch it on the DOM, right? Hold on a second. Man, I got some gunk back there, but it's like, it's not coming out. It makes me want to gag. I'm sorry. Don't look at the camera. I look terrible. You know, the other thing that I would say about that, now that I'm thinking about it, is that like the one advantage that a chart has over the DOM is that you can see the past and you can think back to, okay, it was here and then this happened and this happened and we're here, and like that can be a little bit useful sometimes, right? But the things that you're seeing in the level 2 on the DOM like that are like such short-term signals that there's like really no point to going back on the DOM and looking. There's really not. Or sorry, going back on a chart and trying to look at the past. It's not really very useful, I don't think so. Yeah, there you go. Bob Iacino argues that because of the communication we have now, from speeches to the Fed's summary of opinion, that the lag in policy is not that long anymore. It's not 12 to 15 months. And I also thought that it was more like 6 months. That's why we've been seeing this data in January and kind of been like, well, that's not good. Right? Kind of really starting to bother people. I'd say it bothers me. I'm really concerned about the market in general here, being that like we can't actually make an effective decision on policy here, right? I think an indicator makes things, well, we're talking about something that's fuzzy anyways, right? That's kind of one of the things that I haven't factored into my trading yet. That is kind of like, or that I haven't tried in quantitative trading that we probably should, is incorporating fuzzy logic. So like most computer stuff is, it's either true or it's false, right? So I come in and I make an indicator that is, all of these conditions hold, I take it. All these conditions don't hold, I don't take it. Whatever the deal is, right? But if you really want something that trades more like a human, what you need to do is you need to take all of these different signs and indicators and then create a score from all of that. Like a score from 0 to 100 or something like that, right? And then if you get a score over a certain amount, then you trade it. So it's fuzzy, right? What indicator should I be using? r/day trading. This should be a fun thread. Somebody on new. There wasn't a whole lot going on, so I'm reading Reddit now. This guy on YouTuber's got 8,000 views in one day, and he says it's luck, not skill. That's pretty good. What do I get in a day? I think I usually get more like 2,000, something like that. And that's all skill. All skill. What's the difference between your cumulative delta and NinjaTrader 8's? With NinjaTrader 8, it will load the historical, but no matter what I do, yours doesn't. Is it? Yeah, that's normal. So my cumulative delta is intended to be used in a market with a wide spread, like stocks. So we created it specifically for the stocks. Okay. And what it does is basically, if we look here in the treasuries, for instance, right? If I see volume at 111, because that's what the data says. It says there was a trade at 111. Was it a buy or a sell? Okay, well, because the best bid is 111, we know that market order was a sell market order, right? Okay. Now, what if there's a spread? Like, let's say that the trade was here in the micro 2-year, okay, which at the moment has a 5 basis point spread, right? The best offer is 783 and the best bid is 731. Okay. And I see volume go off at 4.76, right? How do you know if it was somebody put a bid there and then it immediately got hit by a market order, or that somebody put an offer there and somebody immediately hit that with a market order. Which way was it? Was it a buy or a sell? How can you know when it's in the middle? Well, you can't. Not just off of that. And so, especially when, like your level 2 feed doesn't match up, like eventually you should see the level 2 should say that there was a liquidity added and then removed at this price, but like, they might not match up exactly, right? So what my indicator does is it searches for the change in the book. It goes and it says, okay, there was an order at 476. Now I'm going to wait, and there's like a little window that you can tell it to search in that I think it by default is set to 5 seconds. It'll say, okay, which is probably too big. It'll say, okay, can I find an order that matches that within the 5 seconds? Okay, then I know that it was a buyer or seller, whatever the deal is, right? And that's what my indicator does. So it's a more advanced version of the Lee Reddy algorithm. Is what it is. There's another one that's even more advanced that you can write in Python, but it wasn't worth it. How long will you stream? Will we watch the whole, well, not the whole RTH session. So we only trade the most active time of the day. So the most active time of the day is from when the pit session in the treasuries opens until the London close. So I actually leave before the London close because I do have a day job, but we go till about 11 o'clock Eastern time. Everything after that is just a lot quieter. Wish I could trade. Well, no, I don't wish I could. If I was doing this full time, I don't think that I would stream that whole time. I do sometimes wonder though if I should like come back. We tried this for a little while, a little bit of an experiment for like a week, and it was just kind of like meh. So I gave up on it. But I would like to try it again sometime and try with different ideas and stuff. But basically, what we did was, we came back later in the day after the market, after the market was closed, and had a short little stream. Yep. The longer you trade, you end up, yeah. I got to tell you, with day trading, not with scalping. Okay, I really think I had this thing. Gary Norton had a video yesterday, so I left a long comment on it that was probably longer than one should spend on a YouTube comment. But I went into how important I think that terminology is, because I think that a lot of what provides the bad actors and grifters in our community are able to deceive people so easily is in part because of terminology. That because our terminology isn't really set in stone, they really become more brands than they do scientific descriptions of trading. And so people are able to piggyback on those brands, right? Is Gary Norton, I thought he was Australian. Yeah, he's Australian. Do another video with Gary. That 2 hours was insane. It was good. I don't know what else I would ask him though, to be honest, other than like we could talk about what's going on right now. Yeah. Anyways, but yes, his thing is scalping. It's scalping, right? And the whole thing is that people have tried to fuzz the definition of a scalp, because a scalp used to be a very short-term trade where you were taking based on a combination of arbitrage and the order flow, the current liquidity conditions, right? That used to be what scalping meant. And then I would differentiate scalping from market making by saying that scalping is like when you're just taking a small position and trying to catch a tick, whereas market making is when you're trying to trade multiple contracts over a range with those same kinds of signals, right? Ask Mike to get Gary to get a good mic. I don't think he's really changed his setup at all either. I'm sure. I mean, he's done pretty well with that course. I think he's done really well with that course. He could get a new mic, but yeah, you kind of get into the gear and stuff. Is probably not stuff that he'd be interested in. But yeah, scalping should be scalping. Should be called scalping. It should be like a scientific definition. We shouldn't be able to change it, right? What I do is not scalping. What I do is day trading, right? So from a day trading perspective, the less trades you take, the better. If you can come in and take one trade at the very beginning and hold it all session and then take a profit, that's a perfect day trade. That's the biggest day trades that you're gonna get, are the ones where you're able to hold it through a whole trend day, right? Now that's not the case if it's scalping. If it's scalping and you really have a quantifiable edge, then the more trades you take, the better, right? Video with me and Fat Cat. So I don't know what I think about Fat Cat. So I've heard a lot of people say positive things about him. When I go and I watch his videos, it sounds to me like he's talking about the same stuff that you typically see more commonly in the futures trading community, like auction theory kind of stuff, certain technical setups. So I don't think that he is sharing information that is in line with the quantitative research like I'm focused on. But I can't really find out because I just can't stand sitting through a whole video of his, man. No hate on him, but like it'll be like this really narrow subject. He'll have like a really narrow topic, something that I'm like, that wouldn't be long enough for a video if I talked about that, right? And then he'll talk about it for like 2 hours. And I'm like, good God, man, what the hell is he talking about? I don't know. I don't have the attention span to listen to it for 2 hours to find out. At the time, he's been doing better. He's been doing pretty good these days, hasn't he? It's really funny to see how far I fall behind. I really find it interesting. Oh, come on. There we go. Is it this one? Fat Cats of Wall Street? Yes, it is. Yes, it is. Okay. So like, okay. Well, okay. 8 minutes for patience. That's something different. I think I was like, I went by popular. Scalping on a Dom. An hour and 15 minutes, right? Day trading failure rate, an hour and 14 minutes. Your idea of order flow is wrong, an hour and 10 minutes. I'm like, what? What is he talking about? And then I'll go in and I'll start watching it. And I'm just like, I'm not getting enough from it. I'm not gonna sit here for 30 minutes, even if I'm going double speed, right? But like, this is my bigger issue, right? Is I think that teamwork is really important. I think that working together with other people in teams is really important. And it's not necessary that somebody believes all of the exact same things that I do in order for us to work together with them, right? But if somebody is a creator and they're still talking about technical analysis stuff, then you're not going to be able to get very much out of me collaborating with them, right? Because it's just going to be me telling them everything that you believe is dumb, right? He shows you live example. Yeah, see, that's exactly like that's exactly the sort of thing. Like here again. Like here's my. I think that my approach is really important. Okay, because really what I'm saying to you guys is that everybody's approach about how you decide what to trade, or rather the strategy that you should trade, how people come to the conclusion of here's the strategy, there's all these strategies, here's the one that I'm gonna pick and here's why, right? Everybody's approach to that is dead wrong. Okay, the way that you should be approaching that is, here is what we know about the market, and here is a way of trying to factor that information in a way to identify a trade, right? Which means that it should always start with proving that a behavior actually exists, right? And if a creator or a resource or a person says something about order flow and it doesn't include that part, and I mean, it can be like sometimes you can get that sort of thing just from understanding what order flow is and how the market actually functions. There's kind of like really simple high level things. But when we come into all this stuff about, oh, when you see this kind of situation, that means you want to go long, yada, 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 right? And unless they have empirical evidence, I don't care. If I'm watching a YouTube video and you're talking about something technical and I'm not seeing some sort of reference to a study somewhere in the first 5 minutes, I don't care anymore. I don't care. It could be the greatest piece of, like, they could totally have it right. They could be totally right. I don't care unless they can prove it to me. I don't care unless you can show with empirical evidence that it's a thing, right? And so I'm sitting here like, well, okay, am I really gonna have to sit here through an hour and 10 minutes to see if he actually has it? I don't, because I think he probably doesn't. You know what I mean? And so then it comes back to like, well, okay, but you could collaborate with him. That would be cool, but like, what would we talk about? Right? That you don't have empirical evidence? Well, okay. Right? It's much more interesting. I think it'd be much more interesting to collaborate with somebody that is like a researcher at a university that can show you empirical evidence, and you can talk about here are the things that we know for sure about the market, and here are the things that we don't know for sure, and maybe here's kind of where the fuzz is and where where people are trying to do more research, right? That's more useful to you guys, I think. And so I haven't wanted to really collaborate with the other people on YouTube because I think they're all doing the same thing that I hate, which is sharing stuff with you that they learned from somebody else and they can't prove. And I don't have any reason to think that he's any different, right? You know, so like for me, like live examples, who gives a shit? I mean, obviously you want to be able to see it, like, what is it that you're looking for? How does this play out and everything? But like people, that's not why people show live examples. People show live examples to say, look, see, this trading strategy actually works, right? Insufficient, right? Because it worked one time doesn't mean that it works. This is something that I've been thinking about a lot lately. I think because I got this machine learning and finance book. Oh my gosh, this book. So the first 3 chapters of this book are actually really thick. Like the first 3 chapters are a quarter of the book, actually. Like I'm to, or not a quarter, it's 20%. So I'm to there. I'm to there so far. So I've read 20% of the book. And the first chapter is great. The first chapter is like just kind of a general overview of the space of machine learning that I think is useful. Okay. And then after that, they go straight into Bayesian modeling, right? And it's just page after page after page of mathematical proofs and stuff like that. And I'm not like sitting there like trying to get myself to the point where like I can derive all of these equations myself too. So I'm just kind of trying to summarize it first, and then I'll go back and read it again. But he doesn't really do that. It's just like math, and then he goes straight into more math, and then he goes straight into more math. And I was just like, oh man, it's such a hard book to read. But I am thinking about the machine learning and the quantitative side of markets a lot in my mind lately. And I keep coming back to this question. Which is this, and I don't think that this question would like you would make money from it. Like I don't think that this would create an edge for you. This is more like here's a way that we can probably prove that there's not an edge in a certain thing. And the question is this: how good is a line? Right? If we come in and we say this price matters because it was the point of control, or it's the point of control for this session, or it's a 50-day moving average in the S&P 500, right? How effective is that line, and how do you actually try and trade that line, right? Because the whole thing is if you come in and you say, okay, you think that this line matters, so I'm going to go and I'm going to write a simple strategy that says, when we cross this line, try and catch a runner off of it. Say like it's a 50-day moving average. If we come to the 50-day moving average, I'm going to take a trade going long as we touch we're coming up from above it, that as soon as we touch that 50-day moving average, I want to go long there, right? And then that could be the back test, right? And when you do a back test like that, what you typically tend to find is you get stopped out of the trade. Like if you put any kind of risk on there, the amount that the market moves is like more than the stops that you want to hold, and it doesn't work out. And that the stats of your strategy end up having more to do with the stop and target that you set than they do anything to do with the line, which really kind of makes you wonder, does the line matter at all? It's either that, or you can just say hold it until the end of the day, right? Hold it until the end of the day and see what happens. And then you're going to go and look in the stats of that, and it might be profitable or it might not be profitable, but it's going to be like whether or not it is or isn't profitable comes down to like one trade. And then that's not necessarily a very good strategy, right? So you do all of that, and then you say to people, look, see, this backtest suggests that your line is not very useful, right? And what happens? Do the people say, oh yeah, it looks like you're right, Seth, I'm going to start ignoring that line from here on out. I'm not going to use Fibonacci levels in my trading anymore. No, of course they don't do that. Nobody ever does that, because nobody in trading is ever wrong. They never admit that they're wrong, at least, including myself, maybe. And so they'll say something like this: oh, well, the problem was you tried taking it the first time that they touched it, right? So if it's a fib, or pivots, maybe pivots would be a great example. Okay, daily pivot levels. We have daily pivot levels. The strategy is when we reach first deviation away from it or whatever, you sell it short, right? And then you're going to say, well, you can't do it on the first touch of the line. Like the first time that we touch support, they try and fake you out or whatever the deal is. So actually what you want to do is you want to see them come up to the line, bounce off of it, come back up, and then on the second touch of it, then you take it short, right? And you can play that game all day, right? I can backtest that, and then they can come up with a different set of things. And this is the way that the price action traders kind of function, is that there's in this fuzzy land of like, well, you can never actually disprove the strategy because I can always just come up with a different way around which you can trade that supposed support or resistance line, right? So if that's the case, how do you how effective a line actually is, right? There must be some quantitative way that we can come in and score a line by how influential that line actually is to the market, whether it's a line that you would want to take a continuation trade or a reversal trade from, right? And how you would actually try and trade that line. Like, is it something that you can really just take on the first trade or what, right? So there's kind of like those three parts of it that we could use to score a line. How would you generate that actual score though? Because then you could come in and you could say, hey, actually, the overnight high and low tends to be a useful line for an extension. The 50-day, 100-day moving averages, the market seems to react to those. The gamma levels, market tends to react to those. But pivots, Fibonacci's, etc., tend not to be very useful, right? Because that's how I look at it. That's what I think is that that's like my hierarchy is like Fibonacci levels, completely effing useless. Gamma levels, probably the most useful. And I only say that because we have a real scientific reason to believe that the cross of the gamma levels has significant impacts on the markets. And we have absolutely no reason to think that Fibonacci levels do anything, right? But it still comes down to this, how can you actually score it so that you can actually prove that? I don't know. There's got to be a way. Surely there should be a way. If the world's top quants, the people that are much smarter than me, like Iger Halpern and Matthew Dixon, were to take a stab at it with their machine learning, maybe they could come up with a way to say whether or not this line actually means anything. What lines do the OTC guys use for that? Well, I don't think that they really use lines, right? So I can actually explain this to you. This is a really weird, this is going to be a little bit deep, but it's not going to be like difficult to understand. But I'm just talking about something really esoteric, okay? So at Goldman Sachs, they have something called Securities Database. Securities SecDB. And it's their own proprietary programming language that they use to interface with an object database that they have. Okay. Water here. I didn't sleep very well last night. I wonder if it was because I was dehydrated or something. I don't know. I took some magnesium before I went to sleep, and I thought that would help me sleep better, and it didn't. Anyways. Okay, so how do you use SecDB? Okay, what's special about SecDB? Your traditional database is like an Excel spreadsheet, kind of, right? You have these different tables of objects, and then it has all of the information about those objects, and each row is a different object. And then sometimes you might need to pull a record from this table and a record from this, or records from these tables, and then join them together to match them up. And this is a relational database, right? An object database, on the other hand, is more like, here's an object, and this object is related to this object and this object and this object, right? So what you can do in SecDB is you can do this. You can say, this company, a bank, we're going to say we're doing the stock for JP Morgan, right? Okay, what are the things that affect the stock of JP Morgan? Well, we know based on their last balance sheet what assets they hold. So we know if the S&P 500 moved up this much, that changes how much these assets are worth. We know how much money they make based on a change in interest rates. So if the interest rate changed, that affects the price this much, right? And so you have this one object, which is the bank, and then the bank has links to these other objects, which would be the 10-year yields, the S&P 500 index, etc., right? And all of the stocks would point to the index, and the index would be calculated by looking at all of the individual constituent components, right? And the thing that's interesting about this system in particular is that you can get a circular reference, right? Where this thing affects this, and that this affects this, and this affects this, and then that affects the original thing, right? So how do you sort out what happens when you have a circular reference like that? And they have some complicated math where they figured that out, essentially, to the point where, you know, this. I think that it kind of works the same way as regression, which is like you run through it multiple times, and then based on what the value is, change it. How the values change each time that you go through the cycle depends on, you know, what you do next and stuff, until you come to a value that's not changing, right? Hold on a second, gotta ban somebody here. And so the way that the things work for them, for like a specialist, right, is that they've got a price that they are calculating based on everything that they know about the stock, like a fundamental price, based on the current market prices of everything else, what should be fundamentally the current market price of this thing. Now, it will deviate from that a lot. In some instances, a lot. If there's like a meta order going on that stock, it's going to deviate from that a lot, right? But that's basically how they do it. So they're not really using lines. Okay. Some professionals do use lines. Like I've heard talk of hedge fund managers saying things like, oh, well, the only reason I made that trade that made me famous back in 2008 was because we crossed the moving average or whatever, right? Which sometimes makes me wonder if some of these guys that are like the top hedge funds, that they were actually just lucky. But that's the thing. That reminds me, I was reading the other day, it's because people are always saying even most professionals aren't actually successful. But actually, if you look at it, 60% of mutual funds do surpass their index. 60% is actually way higher than I thought it was. Yeah, they're using calculations based on things not in a chart. They're using the current prices of other things. In other words, that strategy that we're talking about is really a form of arbitrage. It's a form of arbitrage that's based on an extremely complicated and sophisticated calculation, right? Now, for them, the way that they really use SecDB, I mean, there is some market making stuff. I don't know how closely that attaches into SecDB, because I never had some visibility into that. But the thing that they really used SecDB for was to test their risk. Like this whole thing about Goldman was the only one that went out and bought insurance on their positions in the mortgage market and everything, right? Why were they the only ones that did that? Because they had SecDB. SecDB told them immediately. So have you seen the movie Margin Call? Is that what it is? It's the one where they're like in a bank and they discuss, like they've got this guy and he's plugging away in the spreadsheet and he shares an Excel spreadsheet, and then they realize, oh my gosh, if something happens, then the losses would be greater than the market cap of our company, and so I guess we need to sell it. And so then the next day they just hardcore sell it, and you can hear them talking on the phone, or them doing OTC, doing the selling, block selling essentially, right? Okay. That my understanding is that movie was supposed to be to some extent about Goldman Sachs, but the thing that I'm telling you is that that's not the way that it works there. They don't have like a spreadsheet and they do this model or whatever. No, they have this really complicated risk management system that kind of does scenarios to come in and tell you every night what the risk is. And then based on the risk, they go out and they do additional hedging. And so that's why Goldman Sachs was able to be hedged and nobody else was. It's always funny with Goldman. I mean, I obviously have a soft spot for them because I work for them, right? But they just keep getting the short end of the stick in terms of PR. Like, they probably more than anybody else on Wall Street care about their reputation. Like, they're really, really hammer at home. Like, I thought that it was, well, I've been thinking about it this week a lot because I've been trying to go into things like culture and so forth. And right, you know, how do you create a culture that is, you know, how do you create a culture and how that helps people and how that increases community? Which, by the way, is just before the S&P 500. It's time for us to stand up real quick. Let's do that. Let's stand up and stretch a little bit. Do a little wrist, roll your wrists like that. This is good for you too, rolling your wrists. Oh my gosh, like every bone in my back just like popped there. That felt really good. Okay. So anyways, when you're in it, I was kind of like, is this like a cult? Am I in a cult? but actually what it is that they understood the science and the importance of culture, and they pushed it really, really hard, right? And integrity is a really key cornerstone of their culture. And yet they keep running into these situations where, because of what one bad employee did, it hurt the whole firm or whatever. And or then like the way that the whole financial crisis thing happened, right? They were like the one bank that actually did what they were supposed to, saw the risk and tried to hedge for it. And everybody gives them shit because they were the ones that survived. It's like, what? Doesn't make any sense to me, but I don't really feel like that the attack on them is really deserved. You know what it is that Matt Taibbi article, the vampire squid article. Because what he does is he goes through and he talks about the history of the firm and the role that it's played in every financial crisis that has happened since they've been in business, right? And it kind of turns it into, see, Goldman Sachs are actually causing these things to happen, and they're a leech on the system. But that's not really what it is. It's just, you're a bank. If you're a big bank, you're always going to be involved. And when something happens in the industry, you're going to have played some part in it, right? See, the sad thing about the 2008 crisis, the true tragedy of the 2008 crisis was that the politicians turned around and, instead of taking responsibility for the systems and incentives that they created, they turned around and blamed it on the banks. And they said the banks and the people inside of the banks were greedy. The reason that this happened was because of the poor choices of individuals. Bullshit. That is not what happened. It was a systemic problem. It was a systemic industry problem. And if this guy hadn't have done it, this guy would have done it, this guy would have done it. It would have eventually have happened because it was inevitable, because it was baked into the system. It were incentivized to do it. Right? Always look to the systems. We're talking about a society, like big picture problems like these. You always have to look at systems. And you have to ask yourself, how can we craft our systems better? That's really ultimately what my life has been about. I've realized. I thought that it was about, like, because I've always kind of been like, you know, I'm testing, seeing the things that other people don't, right? But what I've realized is that that's only one part of designing systems. So that's really what it is. Like a scientist. A scientist is somebody that does science in research, right? An engineer is someone that does science in building systems. And I'm a software engineer, and I know a lot about financial and political engineering too. And that's really what my life is about, is about systems. So it drives me crazy when the politicians, because they don't want to take responsibility, because they're the ones that create the systems, right? They don't want to take responsibility for their system. They want to push it off onto some bad guy that they can blame, right? and then nothing changes because they don't fix the system. Actually, they made some really good changes after 2008. The financial system is a lot safer than it is today. They haven't resolved some of the problems that kind of cause that sort of a thing. So it is inevitable at some point, I think, that we will have a financial crisis of some sort that's going to be really, really bad and ugly and nasty. But when that happens, we are much better prepared to handle it. And so that's good. And you could see that with the whole COVID thing. It's like when we basically put our economy to a standstill, nothing too crazy bad happened because we were prepared for a downturn. I would imagine that they calculate what a fair price is and then price in a discount for their bilateral. Yeah, that's I think that's exactly how they kind of, I don't know a whole lot about swaps, but that is a big factor behind how they do that sort of stuff. Yeah. It's all like really complicated, but like the point is that they're not looking at like the last place that price turned and all, you know, because that's what you're doing on a chart, right? Is you're looking at the last place that price changed, or you're looking at like the size of individual bars, right? And where are we now relative to that? That's all technical analysis, right? And the banks don't use like any of that. They use quantitative analysis, right? But their quantitative analysis is more about factoring in a huge swath of information to calculate what is something worth right now, right? Well, we've been hanging out at 111 for a while. I would say that there was a little bit more time spent up in here. But one of the things that we saw was we moved up and then it ranged for a little bit and then it went up again like it was going to go for a second leg. And then that almost immediately flipped around. And when I look at the cumulative deltas on all of that, the cumulative deltas are kind of uncertain and sideways. So this behavior that we've been seeing the past 30 minutes looks like market maker shenanigans to me. Oh, okay. So NASDAQ Technologies was asking a question. Continue what the SAC does and how they hedge their risk, please. Well, how could I go into what parameters? Like the thing that I'm trying to say. Well, so the other side of this would be for you, NASDAQ, is that they're literally taking tens of thousands of data points and doing calculations on them, right? Like we're talking about a system that takes 6 hours to run through. Like they have all of the computing resources that they have, and it still takes 6 hours to calculate their risk. That is nuts, right? And they're literally going through and doing this kind of analysis thing on like every asset and security out there, right? So it's crazy stuff. This is where I kind of come in and I say like for stocks, like trying to scalp stocks and compete against the specialists it's not worth it. This is just not worth trying because they have access to so much information and they're crunching so much data that you just don't have. That it's just impossible to have an edge in that situation, right? The only way that you can have an edge in those situations is by knowing something about future orders that they don't, right? The arbitrage game, retail traders just not very competitive with it anymore. In some other markets like currencies and futures and stuff, you might be able to find some arbitrage opportunities if you programmed it out, but in stocks, it's not worth it. It's not worth trying to beat the specialists. They're just too good now. Which does kind of make, one of the things that an argument that one could make is like, is there a point at which a certain player has such an advantage in the market that nobody else wants to play, and that's detrimental? Kind of seems to me like that could be the case, right? I kind of feel like that for the market making thing here, that if the robots are going to be here and have such a huge advantage on individual people, that they're going to have to pay somewhat for that privilege, right? Like I think one of the ways that they need to be required to pay for that is that if you have that much control over a market, you still should be required to hold a certain amount of liquidity in there, because this whole thing that like they just disappear when things get rough, the orders just disappear, and then the market is left in chaos. And all of this time, people are saying, well, it's really important that we have the robots because we need the liquidity, but then the liquidity is never there when you need it. Then why are we actually letting them do this, right? There should be, I would favor rules on that. But before I guess I could really say that, we would need to do a market microstructural analysis of the proposed changes, right? Because what do we do? We're studying systems, right? Once you understand the system, then you can craft trades based on that system. Well, what do you need to do? You need to establish what the actual rules of the system are, and the statistical behaviors that come about as a direct result of those rules. If you can't do that, then you really can't generate a strategy from that, right? Then all you have is technical analysis. What is technical analysis? Just looking at it and guessing and saying, well, I think that maybe this thing might be useful. And then you test it. And if it worked in the past, then maybe it will work in the future. That's what technical analysis is, right? This is like a different approach. So this is like trying to come to a conclusion based on the data rather than trying to come to a conclusion based on the rules and dynamics of that system and then checking to see if the data backs you up, right? Completely different thing. And the technical analysis thing, the data mining way of doing things is fraught with fallacies and problems that you have to work around that are really advanced problems and most retail traders don't consider. Well, that was a long pontification I had there on all of that. I tell you what, though, guys, there's lots of problems in the world. There's this real drive these days to try and get you to be concerned about every little problem in the world, right? Because what everything has come into on social media, man, it really pains me to think about it, but it's a real thing, and you really need to understand this, that social media favors narcissists and psychopaths. People that are narcissistic tend to do well on social media, and they go into all of your typical narcissistic tendencies, and then all of the people that tend to be prone to following narcissists, right? And one of the things that narcissists do is latch on to some sort of supposed injustice, right? So either they'll say that they're a victim, right? Or they'll say that another group of people are a victim, right? That's why you get all these people online doing this sort of thing. They're literally narcissists, right? And it's about them. And the issue is only a way that they're trying to elevate themselves, right? So there's that constant push. But if you're a person that really feels that you do have a duty to society to try and make it better, right? That part of our purpose in life is to work together and to work towards a better society. And I do believe that, right? And you can do that and be concerned about things in the world and not necessarily be a narcissist, right? kind of depends on how, what's a narcissist. Oh man, I don't know if we have time to go into all the details about what a narcissist is. Let's shelve that one for a second and we can come back to it. Narcissism fundamentally has to do with that there is a part of the narcissist that the narcissist doesn't like, and when they are a child, they lock that part of themselves away and hide it. And everything is about trying to hide and keep up that facade. Okay, that's what a narcissist is. Okay, and so they're constantly trying to create this false reality around them. Was that bait? That's the simplest explanation of it that I could give, right? Oh, we are talking about strategies, though. We are talking about something. So, anyways, going back to that, the whole thing is well, how do you know that you're not a narcissist? I'm pretty confident that I'm not, but we can go into that later. Okay, so if you are a person that you do want to make a difference in the world, though, what do you do? What do you do? Right? You can't be concerned about every issue, right? And so what I'm trying to say to you is that the thing that will end up having the greatest impact on the world, the thing that we're lacking in this world, and that you need people to understand and to work towards in order for us to have a stronger society, and at the same time, the thing that's going to help you the most in finding success is understanding systems. It's market microstructure, or microstructural analysis of any system. Market microstructure being that analysis on financial markets, right? That's why it's so important that we do it the way that we do, right? And then it just so happens that is the best approach to finding a solid trading strategy. Because now you have something that is based on something that's a real thing that's not just going to go away. It's not just some random correlation that you happen to find and doesn't actually exist, right? So what programming languages are you using in your systems and things? Well, so the thing that I'm talking about here is going to be more math, right? You're going to prove it with math, and then you're going to test it against market data to see if the market data matches what you're talking about, right? But when I program in freaking everything nowadays, man. It's weird the path that the career goes. On one hand, it's one might say that my path through the technology industry has been unique. But on the other hand, I don't think it is. I think that that's just the way that the system will tend to guide people based on the skills that they have. And I'm just kind of right at the right time when all of these changes happened to be on the forefront of it all the time, right? So if you have the skills and you know enough about the overall system, you end up going into site reliability engineering, because it ends up becoming about, you need somebody that understands the whole system, right? So I've used everything at this point. Very few languages that I haven't used, major languages that I haven't used. I'm most comfortable in C#. I am most comfortable in C#. But I haven't actually been using C# too much lately. I've been doing things mostly in Python lately. I also did a lot of stuff with JavaScript, React, and Node. Actually, I have a little project that I think I want to do in Node. So here's my idea. I know I'm being super ADHD right now. Here's my idea. It's a game, and I'll come in and I will choose left or right. And then after I've chosen and I've locked in my answer, then you guys can all guess what I chose. And then we go over 20 rounds, and the person that is the best at reading my mind wins. That's my idea. I think I can program that in Node. Holy, no, I haven't used Holy C. It's not a practical language. I have heard of it before though. That is what I'm thinking about, right? Was that made by? Oh yeah, that's the one. That's the Temple OS one. That's right. Yes. Temple OS is a man. That is a. Don't go down that rabbit hole. Okay. Don't go down the Temple OS rabbit hole. It's not worth it. Oh yeah, that's right. But people have kept it going. That's the crazy thing. Anyways, but I've even done a little bit of C. I've done a bit of C++, done Java. I think my least favorite is Java. It's always like I look at when I'm looking at places to work and I'm like, well, that looks like that would be a fun place to work, but they like to use Java. Well, like I understand why they use Java, but like nowadays C# is like better in every way. And Java just sucks. Like there are all sorts of really great solutions for it now that I think kind of that kind of work it out, but ultimately these are all band-aids on a language that has some fundamental design issues and for some reason they don't want to move away from. Okay, so here's the PMIs. It's a good reminder that we got the bigger news coming up at the top of the hour, huh? Which we will want to pay attention to. Oh, you use the mainframe? I've never done that. What's the big one called? So I remember early on COBOL. I remember early on one of my friends, he was kind of had a small interest in COBOL. Yeah. The one that I'm interested in right now is Rust. I find Rust a very compelling language. So some people say that, you know, like it's not actually all that great because, well, you can come in and you can code in Rust the same way that you code in C++, and you just have to put unsafe everywhere. So like anytime that you're doing something like that would be like where a possible memory leak could come out in C++. You have to say unsafe in Rust so that you're acknowledging that that's a possibility for it to happen. But there's ways that you're supposed to structure things that are different to just avoid those problems to begin with. And it leads to all manner of other complicated design and patterns. So it's you really have to like study Rust itself. It's not a language that you just come in and pick up in an afternoon. Like you really have to like program it and come into the situations and learn those things and like read books and stuff like that. Kind of like with C++ to some extent, right? But the difference with Rust, I'm less interested in the language itself than I am all of the things around it, right? Like I come in and I want to use Rust, like the package manager and the things to build and the things to do unit testing, like it's all built into the language and it's all done correctly. So you don't have these problems that you do in other languages of like, well, we need to find a tool to do this, and then the tool doesn't exactly match things correctly, and yada yada yada. You don't have that problem because Rust was designed with all of the knowledge and experience about the software development lifecycle that we've gained in the last 20 years, because that's the biggest change that I think we've had in the programming world in the last 20 years is kind of a more effective and well-defined software development pipeline, right? Now everything is about integrating the cloud into that pipeline and getting the tools all to where they integrate really well with the cloud, which might take another 10 years, but we're getting there very quickly. Right. But Rust does these things really well. So I should do more stuff with Rust. But the one that I want to do in Rust was make a timer, and that had more to do with like making an interface in Rust, and that the libraries for that aren't very good yet. Could also be making a trading system in Rust. I think that the graphics are to the point where I could do that, could make a charting platform in Rust, but it's not a high enough priority for me to be putting time into it. I will try making that game though. But the top priority if I've got programming time is machine learning. On Monday, well, I do need to start writing. Maybe I can do that tonight and today. Start writing the problem with auction theory. Actually, I think I'm going to call it volume profile, but it's really about auction theory. Should be a good video. There's probably going to be lots of chatter on that one. Neck's not feeling so hot today. Okay. So, time for us to start thinking about the PMI services PMIs that we're going to get, right? So, on this one, this is kind of a unique situation that we've had with these numbers for a while, which is that the ISM services prices paid number is kind of a critical component because services is where we're seeing the inflation, right? Now, the issue is, the reason why I say it's unique is that prices paid does not have a forecast. There's not a consensus forecast for it, but the previous reading was 67.8. So for us, that's the one that we probably need to pay attention to. Good morning, Lucas. Oh yeah, that reminds me. I was thinking the other day, I was like, I need to start keeping track of people, sort of a thing. And the thing that made me be like, well, we should keep track of that is I want to remember when Lucas passed his combine. Your stream always opens on 40. Yeah, I don't know why YouTube just likes to do that. It has nothing to do with the way that I set it up. Okay, so I mean, who knows what we're gonna do here after this news? This news could end up really moving us. So I think we might be surprised by how far the index moves. Of course, it could always just be in line, and then I'll be like, wow, today sucked. Nothing interesting happened. I think you're wrong, Jim. Jim says the pandemic did not cause economic damage. This is provable. That's not true. We definitely, what happened was we created such like a huge spike in all of the data series, and then everything else after that has just kind of been the data trying to settle and find, and policymakers trying to figure out what they're supposed to do based on that. Oh, man, all of a sudden I just had a thought about something that I need to check. And I don't know why it pops into my head now, but sometimes when that happens, I just need to do it, because if I can find it. I have to look it up. I have to look it up. There it is. Do you think that people that have ADHD might be able to come up with different ideas, since one of the positive traits of ADHD is divergent thinking? Right. So it's not like an ADHD person can come up with ideas that a neurotypical person can't. Okay. But there are certain types of ideas that an ADHD person is more likely to come into. And they tend to be ideas that neurotypical people dismiss. So what happens is a neurotypical person has this network of frontal thinking, right, that is able to very quickly look at an idea and say, this is where I need to go, or this matters and this doesn't matter, and so on and so forth. An ADHD person still has that network, but it's slow, so they don't make the split decisions. So for instance, this comes in with systems design. This is why I end up being good at looking at systems, is that an ADHD person kind of is forced by the way that their brain works to consider everything about the system, right? And they get good at looking at the whole, whereas a neurotypical person, they are immediately going to focus in on something and dismiss other possibilities, right? So what that means is that ADHD people tend to see things that other people miss, and on the other hand, also tend to make mistakes that normal people think are really silly, right? So that's what it is. It's really, once you get into the science of it, it's really interesting, right? So where I think it's kind of interesting is like once you get on medication, if you've grown up your whole life having that sort of thinking, but now you have the medication and really you're performing at your tops, so you kind of get the advantages of both sides. Or at least that's what I feel I do. Because like look at our channel, right? I have information on my channel that you won't find anywhere else. I have an approach in my channel that you won't find anywhere else. And it's a critical approach. It's an approach that like really everybody should be following, but they don't, because they dismiss it. They saw this research and they said, well, that's only applicable to somebody that's executing a large order. And so they didn't stop to think about how could I actually take advantage of that, right? Yep, it's a direct thing on the stream. And that was going when we were talking about Fat Cat. That was the thing that I didn't get into, is like I've seen a lot of channels leapfrog my channel, even though our content is really, really good. And I feel like our videos do really, really good. And I'm often like, is YouTube throttling me or something? Like, what is holding me back? Why do other channels that I think are trash do so well? And I guess I don't really care so much about it anymore, but I still don't know what's going on there, you know? People know how to game the algo, and I guess. So like the one with Fat Cats is, it seems to me like his channel has taken off as of recent, and I can't figure out why. There's nothing, like, he's not using the typically the little tricks that I hate, that I think are immoral to use in our space and things like that. It's just the channel just happened to take off, I guess. And in fact, in many ways, I kind of feel like that he's doing some things in his videos like wrong. Like that he has these videos that are like really long, and I don't see how anybody sits through them all. Right? The other thing is that he has many videos. Like his top videos haven't been that like, I have many videos that have more views than his, but somehow he was able to get to 10,000 subscribers. How did he do that? It's weird. Okay, here we go. Ow. Okay, so prices paid was less than last time. I think no trade for me. Yeah, that's weird. Okay, so real quick, ISM surfaces PMI 55 spot 1 versus 54 spot 5. So spot 6 higher than anticipated, but prices paid 65 spot 6 versus 67 spot 8, actually lower than last time. I mean, we don't have an estimate, so we can't work that out. But they pushed down quite aggressively off of that, didn't they? They pushed off of that quite aggressively off of a difference that I don't really find that significant. So I don't think I can explain that flow. When I saw the initial move, I kind of thought, oh, maybe I should try hitting it here at 4%. But now we may still take a trade, but I'm going to let them rebalance a little bit, and I'm gonna wait, see if I get some like other synopsises of the data to see if maybe there's some stuff hidden in the report that we think. Higher employment, yeah, 54 versus 50. That could do it, maybe. I'm not sure. That's a tough call. I mean, it looks like the pressure is clearly down, right? That's just, I don't know if I have enough information to suggest that we're really going to get enough orders to really try pushing this, you know? I think that we do have enough information to justify taking a long. Well, geez, look at that. Okay, so we're seeing some really strong action in the dollar. Wow. Okay, so I just heard a click there. There's been some like stacking and pulling on the bid for some reason. There's a little bit of iceberging going on there at 22, and they tick up. So that's a good point to maybe just wait for a moment and see if it pulls back here. How much net selling was it? 95 to 88, 7,000 contracts. Well, I'm really interested to see how this turns out. I feel that the current environment is not really very favorable to us because like we'll get data and the data is just getting more and more difficult to interpret, right? If we even believe the data to begin with. And I think that that's one of the things that's been making it really hard the past 2 months, 3 months. That was kind of funny though. There was that spot at like 4.01. And now remember I was saying, I think we have enough to justify going long, but I'm going to wait a little bit. As soon as I said that, there was that, they burst through, right? This is, oh my gosh. So President Biden just tweeted. He says, while congressional Republicans talk about the deficit, we've been doing something about it. House Republicans' commitments would add $3 trillion to the deficit over the next decade. Meanwhile, my budget would cut it by more than $2 trillion. That is so disingenuous. Because do you know how they're doing that? They're doing that with all of these crazy proposals like wealth taxes and all sorts of other tasks that have no chance of ever passing. So to come in and to say that that shows that you're serious about the deficit is such a load of shit. I really hate politicians these days, guys. I really do. Is Ian not? No, it's down quite a bit. They got hit hard. I was saying I think we might be surprised by how much this hits the market. I think we were, because I thought it was like I was a number that I'm not quite sure what to make of it, but the Treasury sold it really hard. No, I didn't take a trade. I'm still kind of sitting here. There was a little bit of a pullback, but that wasn't the best. It was only back to what, 23.5. It seems like that there might be some sort of an iceberg at 23.5. We're in an area where I think you have to worry about retracements and stuff, but at the same time, it's awfully heavy, right? Yeah, so see like that. You're definitely getting backwash. It's backwash is just kind of flowing back into these sellers. Like the sellers are just selling it really aggressively still. The spread is getting smaller in your instrument? Yeah, I guess you could say it is. The spread definitely came in the 2-year, but the spread in the 2-year was ridiculous to begin with. Well, just the micro 10-year yield. See, like there was some like really aggressive, should we say, backwash, but the market orders just keep coming. Down to the right. What are you talking about? It's a micro 2, 5, 10, 30. It's mostly this one. Sometimes I sit here and I wonder, like, should I even have the 5-year up? Like, what's even the point of having the 5-year up? Maybe I should just do the 2 and the 10. Okay, well, I am seeing like gold didn't like that, Japanese yen didn't like that, the dollar moved up pretty aggressively, treasuries of course all got hit, yields flattened, S&P 500 sold off, but that's more of a retracement of the upside action that they've seen since the open. And are they going to trade 24 yet? Okay, so that's interesting. When I was looking at the chart, I thought maybe there was an iceberg there or something, but that's not the case. It's just that they were just hitting back there. So now that they've touched it, they're stopping through. Yeah. Okay. Yeah, the 5 years filled with cobwebs. That's what it is. I love that. That's a good way to put it. You think this will come back and squeeze higher than where it came from? Could be. I mean, that's certainly what I've been worried about and why I haven't taken a trade is that I'm not so sure about the numbers. That even when I saw the net 7,000 contracts selling, I was kind of like, I don't know if I actually want to go along with that still, though. I don't know if they can actually keep that one up. Here's an interesting article on Zero Hedge. It is now impossible to keep politics out of central banks. Okay, so here's the Zero Hedge story on the PMI. With both manufacturing sector surveys still in contraction and signaling a stagflationary drop in production while prices paid rebound, expectations were for both services sector surveys to signal growth in February. The final print from S&P Global's U.S. Services PMI was 50.6, up from the flash print of 50.5, and a big rebound from the 46.8 print in January. After a big rebound in January from the sudden pledge in December, ISM Services PMI dipped very modestly from 55.2 to 55.1. This is a return to expansion, a bit barely, for S&P Global survey after 7 months of contraction. Oh, this is the S&P ones, not the market ones. For the views, I recommend comparing combines and trading them, pushing numbers. People like to see them freelance. Like, well, so if I'm going for views, I'm not so sure that combines are actually the thing that will give you the most views, right? That's where we kind of get into like. So I have a couple of videos that we definitely want to do. I definitely want to do the problem with volume profile. That's going to be the next one that we should put out sometime in March. And I do want to do one about Bitcoin. And I don't know if that one will do very well or not. I think it's a video that probably is out there, but I would like to have it in there. Then there's a couple of other ones that are like the top questions in day trading that I think are the most likely to get eyes. So for instance, how much money do you need to day trade, right? That's useful. But beyond that, the thing from my research that is the most likely to give us like views and so forth is to do analysis on specific market stories going on in the market at that time that carry a lot of interest. So for instance, in the past, I've done videos about like, okay, here's Nike. People are interested in Nike stock. Is it actually a good short here or not? Well, here's a couple of things that the normal regular person might not know about this that are kind of important to if you were going to put a trade on in this, right? And you know where I would come into like that. So this isn't actually a good trade to go short Nike here, unless you're gonna like hedge it with something else. But so we can do that. Basically, the gist that I'm getting at is that, like, our channel has been so focused on futures and order flow in particular that that's like a very, very narrow range of things. And when you expand it to more of the stock market in general, you're going to bring a lot more viewers. How to trade well, and technical analysis could maybe help too, but like, no, I'm not gonna how to use volume profile. I'm gonna make a video that is the problem with volume profile that is just gonna shit all over it. Well, it's not gonna shit all over it. There's some good things about volume profile, right? But I'm going to show how ultimately the entire theory is flawed. The entire theory is flawed, and there's going to be a lot of people in the futures trading space that are going to disagree vehemently with it, but the evidence is all going to be there. Right? And the thing I'm going to say is, like, if, okay, you really think that this theory of thing works, then show it using past market data. Show us a repeatable strategy that we can program up, and show us the results of that strategy over 5 years, and show it that it's actually good. And then let's go and start a hedge fund with that. Otherwise, the data suggests it's bad. Equities, well, yeah, equities are turning back on bullish really hard. I'm really curious. So we've seen buying the last 2 days in the equities market that I haven't really seen a good explanation for yet. Where is the data coming from, you know? Or sorry, where are the orders coming from? I suspect that it's coming from short squeeze, but I don't know if that could really be all of it, you know? So I guess we just kind of have to see. But man, it's been buying in the S&P past 2 days, huh? The other thing is that, like, the thing what we thought was the impetus yesterday was a comment from a Federal Reserve speaker, and we didn't actually he didn't actually say anything important. It's an hour until we get next speaker, so at the moment, at the moment, I'm kind of thinking about who was it, Joe Orsini. That I'm kind of leaning with Joe that this move. Well, actually, so there's one caveat here. So let me come to the charts. So we're always in this situation. We want to think about the square root law, right? So we had about 7,000 contracts down. We had about 7,000 contracts up, but look, they didn't completely retrace. So normally you would expect there to be a huge liquidity hole going all the way back to here, and that if they had 7,000 contracts, that we would make it all the way back. But we didn't, which suggests that there are offers out there that you would have to plow through. So that's the big thing that would give us pause on trying to go for it higher. This may be a good spot to go short. So then the question is, why is it doing that? So then we can come in and look. Well, there is steepening here, and you can see there's like hard buying in the 30-year, somewhat buying in the 10, the 5-year, unclear, but it's not really clear. I would say maybe you would see selling in the 5, and maybe you'd see selling in the 2 to justify the spread, but it's not. The volume is just kind of iffy all around. So I don't think that gives us a very good confirming signal on anything about this is gonna, there's gonna be more, this is gonna move more, that sort of a thing, right? And I'm not really seeing a whole lot of chatter about it, to be honest. So when you do a video, what's wrong with volume profile? I also do a one-on-one. So what do we want to say about cumulative delta? I don't know if that one would really be that good, because I do see something like the thing that I see people do is they say, okay, cumulative delta rose, so I should buy. Right? That's the mistake that you make with cumulative delta. And you know, I think we can explain why that is, but I think that I covered that kind of stuff, maybe not directly, but that you should be able to sort that out from looking at my videos that already exist. Yeah. I want to go after volume profile. I really do, because it's like a sacred cow, you know? Like the people in the futures space, you'll find very, very few people that speak badly of volume profile, right? They're all into it. And when you come in and you say like, well, like, look, this price that you say is the point of control, it's just the close. It's just the close. So who cares? You know? I think that there are maybe some traders there that look at that stuff, but I don't think it's something that like they teach to their traders and like really focus on and stuff. I know that they do look at VWAP, but I don't think that they're using VWAP to so I remember the person talk, because I didn't know what VWAP was at the time, but thinking back, I think they were talking about VWAP, and they were saying that like when price comes back to VWAP, if they were managing a trade, there would often be a lot of fight at the VWAP. That was a place where they were kind of like more on alert or something like that. But here again, this whole thing that like it predicts the future direction, doesn't seem like it does. Sorry, so I have this other thing in the back of my mind, and it's really hard for me to like talk, and then when I have this other intrusive thought in the back of my mind, so I have to talk about it. I've written my own Discord bot to detect impersonators. And so it's doing it now, and now I can see how they're doing it, I guess you could say. So they will come into the channel, they'll come onto the server, and then they'll change their name to my name and start trying to message people, right? And I thought that it must be somebody really persistent and doing the same thing over. That was like my assumption. But now what I'm seeing is these are actually like normal people. Like this is a guy, he had a normal Discord account. He doesn't care that he gets banned on our server. So he comes in and he does the thing, and then he hightails it. So I need to figure out what server they're coming from. I need to figure out what server they're coming from. And I don't know how you... I don't know. Maybe we need to put this in like a top channel. Like, wait, so if I do this... Yeah, like I'm not able to load their profile in anymore because they got banned, and it looks like he's offline now too. Yeah, now it got all the way back. No, it's not all the way. It's we were at 111 to begin with, right? I have to say it was a really our move for this situation. Yeah, it's like a phishing. It's a phishing. That's exactly what it is. Is they impersonate me, and then they go around and they try and message everybody and try and pretend that they're me. And as far as I can tell from what people, so everybody picks up on it. Like, I don't really think that very many people are being fooled from it, but they'll try and say, here's this new service, and try and get them to go to some other server, other service, right? So, well, maybe it is a hacked account. That could be the case. So the thing that I want to see is, so like when you look at a person's profile, you can see mutual servers, right? You can only see mutual servers. It's clearly not a server that I'm on. But it seems to me like there probably is a server out there, and if I can find out what it is, I might be able to put a stop to it, either through Discord trust and safety or a legal cease and desist, right? Because with the way that it happens, I really think it's individual people. I think it's a different person each time. I think that they have like this thing, like they must have a list of Discords, and they say, on this Discord, this is what you do, and on this Discord, this is what you do. And that's why they keep doing it. Because if it was one person, then they would see the implements that I've put in place, and they would never use my exact name or try and use the special characters that they do, because those will both get you banned immediately, right? But they keep doing it, which suggests to me that it's like some sort of set of instructions that like has never been updated, you know? And the other thing is that when you see, so like here's an example. I have a log channel where it shows all this stuff. So here's my bot detecting it, and then I have these other bots that do it, right? Hashbot deletes it, and you can see Probot just says that somebody was deleted. But then you can see his avatar. That's somebody with a real avatar. Like that they made that for them. Like that's a real person. That's not just some robot that was just made out on the spot for exactly this person. This is a real person. So where did they come from? I also wonder if I do this. No, it still says that their name is Speculators up. Another thing that I do see happen from time to time is that they'll like I don't know, like this guy, he's offline now, which I think is kind of weird, but I don't know if that's like they're offline or if I just can't see them because we're not on mutual servers and we're not friends. You know what I mean? So I think what I need to do is I need to be like, does anybody have mutual servers with this person? Yeah, we're going to do that. We'll see. Probably will answer. Anyways, sorry. What were we talking about? TWAP? Well, so they did use VWAP and TWAP as like execution strategies in some situations. So my understanding of it was that if you've got something that's really a slow trickle, I mean, like you really want to spread the orders out over multiple days, and the amount of volume that's coming through is very, very little amount, right? that like a VWAP is still advantageous in some cases. So they had this whole thing of where there were some niche situations where VWAP and TWAP were more effective execution algorithms. Just thought to add, yeah, I've been super paranoid about that stuff. I've been moved two-factor authentication, password managers with really high security passwords and all that jazz. Yep. Never, I tell you the big one that I see out there all the time on websites, and it drives me crazy. That never ever use a text message to your phone as your two-factor authentication. Okay, like you always have it be the authenticator where you have to put in a six-digit code that it does, because people can hijack your SIM card. It's hijacking your SIM card is not actually that difficult, apparently. So yeah, definitely don't use it just as like a text to your phone. That's a lot of people lost cryptocurrency, had large amounts of cryptocurrencies stolen because of that, right? And that's the other thing is, like, with the cryptocurrency stuff, I put it in a hard wallet and lock up the key somewhere and don't have it on your computer, because what if they hack into your computer? Then they can get the keys that way, right? Well, no. So when you're setting up two-factor authentication, they should give you a thing where, like, you scan a little barcode and then you put it into an authenticator app on your phone. So it would still be, if basically it sets it up so that in order for them to get into your account, they have to have the physical phone, because the physical phone is the only thing that has the private key on it that is necessary to generate the 6-digit code to log in. Does that make sense? I really abbreviated that, but I suppose if you think that your email is safe and you want to have a two-factor authentication where they send a code to your email, you could do that. But then, like, what is going to be the two-factor? Yeah. Oh, the code scan is better. Yeah. Yeah. Don't do the one where they text you the code, though. That one's very bad. Like, all they need is your phone number and then they can impersonate you. They can hijack your SIM card with nothing more than your phone number, like, literally. my understanding of it. And that's how a lot of people had cryptocurrencies stolen. Okay, so they didn't completely retrace the move, but they got really good and they pulled back, and now it's kind of starting to trend back down. So I was gonna say, if we felt really strongly, I feel like that 832 is too late to take in a trade, but if we really felt strongly that this should be a sell, this would be an okay place to try and sell. The issue that you get, though, is it is a Friday, and the further along we get, the less opportunity that there's going to be. So this big impulse down and then retracement was probably the real trade. I feel a little, I don't feel the best about it, because, like, I want to take some trades. We did really good this week. I mean, we hit we hit $50 for the week. That's a good week, right? So I guess it's not necessary that I take a trade, but I do feel like there's been a couple of moves that were really good moves and I just wasn't able to participate in, right? Well, they sure came back down there awfully fast, didn't they? Like if I had taken 4% there, I wouldn't be filled, but we'd be close on 1 basis point. Anyways, I really want to know where these guys are coming from. Just taking some notes here. They did slow down there now at 25. It looks like they're not going to give you the whole basis point. That's interesting. So I'm taking notes on all you people that come to the stream. and I'm just realizing how many of you there really are. It's really, I find it quite humbling. I honestly, like, in my daily life, you know, largely because we have kids and we're married now, so I don't get out and like have friends that I interact with on a daily basis or anything like that. There's not really very many people close to me that I've really been able to like connect with per se, you know. So to me, I'm just like some random guy. So to have so many people, literally hundreds of you really at this point, that come in every day, several times a week, is just like so, because in my mind, I understand that you guys get something out of it and that we have really valuable content from it, right? But in my mind, from like the perspective of how interesting of a person is Seth, you know, I'm generally not the most interesting person, you know. So it just continues to surprise me sometimes that I've had as much success as I've had, knowing where my limitations are. William, how much does Jigsaw cost? Is it a monthly or is it a one-time fee? It's both. Yeah, that's the thing that sucks about Jigsaw. I mean, most platforms have some sort of like a monthly fee built into them. But usually they're like $20 or $30 and Jigsaw's is $50. So Jigsaw is basically $500 to start out to get the software. And then the live trading license is $50. Okay. So, I mean, if you're trading and you're profitable, that's not too hard to pull, right? You don't have to have the live trading license if you're just trading sim. Okay. Yeah, and you can pay for the whole year at the beginning, and there's also you get a discount at least once in the life of the customer. So you wait around for Christmas and you should be able to find a discount. So you can bring that down a bit. Thank you, Lucas. So if the monthly cost is a major consideration for you, then you're probably going to want to look at Sierra charts. Okay. Jigsaw is for the I can afford to pay $50 a month on this, and I really just want the best software that there is. But I'm not filthy rich, so I can't use trading technologies. Right. You're a plethora. Well, thank you. You know what the other thing about it is, though? In the end, the thing that I think I have that other people don't have, it's not like nobody else does this, but I'm definitely tend to be ahead of the curve on this, is just my enthusiasm and love and understanding the importance of creating online communities. I've always been one of those guys from when I was a kid that I've got to find that forum where I post on that forum every day and argue with the same group of guys every day and play the same game every day with this group of people. And when I don't have that, my life feels incomplete. It really does. And what happened to me and what kind of got me into doing this was that my community, the one that I grew up with, kind of got destroyed. The game that we were based on got thrown to the wayside, essentially, and then the community kind of splintered, and then you add Reddit and everything else on top of that, and people just kind of disappeared. So I had to make my own. I had to make a new home, and I knew enough about having been in communities for so long to be good at creating that, right? So I might not have all of the skills and or the desire to do the things. I think a lot of it has to do with some of the things that you got to do to really stand out on YouTube are things that I really don't think you should be doing in the day trading space. But I digress. So I might not get like the big thing, right? But I get the guys that come in every day because I know what being in a community is like, and I know that the whole thing here is that we see each other every day, right? We see each other every freaking day. And that truly is something special out there. Like there are other I'll go and peek in on other channels from some, they don't have the same level of consistent community with the same degree of closeness that we have. It's not even close. And so from that perspective, it's not actually me, is it? It's you. It's the combination of all of us together that makes the channel so special and keeps people coming back. And all I am is the conduit through which this community collects information and then turns that into content, right? That's all the role that I am is. That's how I feel about it. That doesn't mean that you're just bots. What is that supposed to mean? We are the only surviving. There you go. In a world dominated by robots, one team risks it all. And the whole thing is that when I came into trading, I didn't have it all. When I started this channel, I didn't have it all figured out. I knew a lot of things. There was a lot of things that I knew that I didn't know that I knew, you know? But there was also a lot of things that I thought that I knew and I was wrong, right? And it was only through the interactions with you guys and the continual trying that got us to this point, right? If I had something like at the very beginning of the stream, caught this incredible trade, made tons of money, became like a 100,000 viewer stream to the point where I was making like so much money from the YouTube that I didn't know what to do with it, right? And then just started gambling larger and larger amounts. Like I've seen some YouTubers do that, right? And become like this huge community right from the beginning. Then it wouldn't be valuable, right? Because I would not have been working with you guys. Like if I had thought that I was figured out, then we would have stopped working and we wouldn't have discovered the valuable information that we've had, right? I think that's a really strong lesson to have, is to always try and work as hard as if you're losing, right? Always work as hard as if you were losing, because it seems like when you're winning, everybody kind of rests on their laurels and decides to get comfortable and falls behind, you know? And that's lesson number one. And lesson number two is that a single person is simply not competitive in this space. You can't do it alone. You really can't. I mean, you can be really good, but you're not going to be as good as Seth's stream with 100 people that are constantly searching and looking for new information about the market. You're just not, because you're one person, right? Together, strong edge. This market period felt like a roller coaster on my P&L. I bet. There was certainly opportunity here today, but this is not an easy day to trade, was it? Because like that move, that initial down move was so strong, and then it retraced so hard, you know, that, and I wasn't, you know, when I see a move like that, I don't like taking the reverse of those. I guess today you could maybe justify it. You could say, well, volatility is still small. I'm not so sure that that piece of news was very significant, and it's Friday, so we're more likely to see mean reversion. You probably could have made that determination, but that's not my tendency, you know. Apes together strong. Well, I don't want to be apes. I think that you are all very smart and sophisticated for the most part, and many of you are much more knowledgeable than me in some respects. I mean, everybody kind of has their areas of expertise, right? I kind of end up being a generalist, and so that means that every one of you has an area that you've specialized in that you know more than me about, right? But I don't like we were talking about yesterday, like the big focus from here on out to me, I feel that we've done a pretty good job of understanding the market microstructure and the things that are relevant to us as day traders, right? So in order for us to continue progressing as traders, how do we do that? Right? Is it from reading more research studies? Well, we should continue to read more research studies, but I've kind of started to come to the conclusion that we're unlikely to come across very many studies like the inelastic markets hypothesis, for instance, that are just so mind-blowing that it really gives you a better view of the markets and so forth, right? So really the place where we get better from here is by becoming a better team, right? And so the question just becomes, how do we do that better, right? So the plan is, from the first step, is to try and develop our culture better. By the way, since we're coming in here on the close, you go here into YouTube in the chat and you type colon chart, right? Then you get these different choices for emoji. So you can do upwards trend, you can do increasing or decreasing. So if you took a trade today, let me know how you did. Just put that in there. You know, you didn't. I'll show you an example here, right? Come in and it'll show you increasing. If you took a trade, show me how you did. So here's why I want you to do that. This isn't like everybody's going to know how you did and we're going to start judging you for it and that sort of a thing. But instead, what it is it's a ritual. And when you come in here at the end of the day and you let the group know how you did, we all understand that everybody is at a different spot and that we're not really very good at tracking the long run stats of something like that. So we're not doing it to judge you, right? But what it is it's a ritual to say, you know, if you did take a loss that day, right? It's okay. That's the normal thing. That's what we do day in and day out, and we report it to each other day in and day out, because that's what trading is, right? And that will prevent you from getting the ego, right? Because you have to live up to what you did in a way. I mean, it's nobody's going to remember it, but you're still holding yourself accountable, and going through that ritual will reduce the anxiety on it, right? You know, so if you lost, right, you can come in here and you can post that uptrend or downtrend emoji. You can post that downtrend emoji, and then you know what? You can go about the rest of your day, because that's just what we do every day, right? And you don't have to worry about it. You don't have to feel anxiety about whether you won or lost that whole day, right? This is a ritual that I think we want to do, is at the last 10 minutes of the stream, post these emojis. And heck, you can even just post an emoji which way you feel like, even if you didn't trade, for all I care. But that's what I think the ritual should be for closing the stream, because that's how we create community. And like I said, ritual like reduces anxiety, makes you more confident. It helps a lot. And I think you will find that doing this makes you a better trader over time. It'll be crazy. It's crazy how these kind of like social community ritual sort of things work. But I've done a decent amount of research on this that suggests that these sorts of things do help you out. So there we go. I got a couple of people posting them. I appreciate it. So that's one thing that we do is right now the focus is just on, we have a really great community. So let's make it even better. Let's make it even closer. The map was a part of that, right? The map was like, well, okay, so let's get a map of where everybody lives, right? And even keeping track of some of you guys that have been here, you know, that have been here so consistently. There's a group of about 24 or 36 of you that are really, really consistent, right? And so I want to give you guys, I want to know more about you, right? And then stage 2 of this will be finding ways to help you better contribute to the stream. I don't know how we're going to do that, but that's what I'm brainstorming about right now, is trying to find opportunities to let you guys contribute more. Part of that might be working in Discord together more, maybe. One thing that we will be doing is posting the backtesting stuff for backtesting volume profile. fact, I might post something about that in the Ninja Trader channel today. Probably should do that. There you go. There's Uzi. I see a lot of upward trending charts, guys. That's good, right? Well, and now just before because I am about to leave here, but let's just take one last look at the markets and what happened today. See if there's anything else we can pick up on this, yeah? So we had some kind of slightly trending up action before the session, but for the most part, we just kind of went nowhere until we had the news. And then when we had the news, the treasuries in particular shot down pretty hard and then retraced almost the whole move and are now come all the way back down to the bottom. And I've seen on this move down further quite a bit of volume in all of the instruments in relation to that. Now, the news was the PMIs, and the PMIs were a little bit better than expected. It didn't seem like it was too big of a deal, but it looked like the market that was maybe the most influential was that employment was good. And so the market may be concerned that the Federal Reserve sees employment still isn't coming down, and so they might need to be more aggressive. Looking at some of these other assets, we saw just before the S&P 500 open a pretty hard reversal in oil, and oil is trending up pretty nicely. Some of these other assets are a little bit more fuzzy, like the dollar did move up, but not so strongly. Like if we zoom in on this one, right? Dollar up overall through our session, but it's pretty messy. Gold and silver, they did get hammered, but not too bad, right? So, and then we should also come back out here and look at the calendar for next week. Yeah. Forex Factory. Oh, great. Forex Factory. What is in store for us next week? Okay, so first of all, we do have non-farms next Friday. It's not the first Friday of the month for some reason. So, it's so funny. I made that video and I was like, if you don't know that non-farms is the first Friday of the month, and then like that, the next non-farms after that, it wasn't on Friday. I thought that was funny. Okay, but anyways, okay, so on Tuesday we have Chairman Powell testifying in front of Congress. Is that it? No, due to testify about semi-annual monetary policy. Yeah, before the Senate Banking Committee. Okay, cool. Factory or Monday is pretty quiet. Factory orders. But then all of these other things we get are like the normal first week stuff, like ADP, JOLTS, and then Thursday unemployment claims and before the average. So next week is basically all about the average earnings and Powell at the beginning of the week. So I'm not going to say that it's going to be like a super big week, but now the week after that, I think the CPI on Tuesday could be pretty important, right? CPI, PPI, University of Michigan consumer sentiment. And then the week after that is, FOMC, March 22nd. Okay, so I'll see you guys next week. Have a good weekend, rest up, get some good life work done, yeah? And in the meantime, stay excellent, team.